Okay, traders. Sorry, just been a little bit caught up getting the all the course material done. Should be hopefully finished early this week, and then we can get you guys into it. Now, just having a quick look at what's coming out. I mean, there's lots of. This is a big week, right? Massive week. Obviously, the key part to it being US inflation numbers. Now, the market's already gone for a massive run here on the anticipation that these numbers are going to be strong. I tell you what, you know. Traders globally are generally conspiracy theorists. You think, well, if it's gone this hard, this quick, looks like maybe someone's already got the numbers. But we'll have to wait and see. But what it does is actually, while I'm there, the current moves on the charts, and I'll just have a look at that. The build up here on the dollar, the euro back down towards parity. Dollar index is obviously through the roof. Dollar Swiss, dollar yen. Dollar CAD doesn't really want to play. It's a little bit neither here nor there, but sterling, Aussie, Kiwi, all sort of heading south. Now, I can remember when the euro was in the 80s, right? As in like 89, 88. I couldn't believe it got up to 130, whatever it was. But anyway, the big moves here, if these inflation numbers, we get a bit of a shock, bang, turnaround in the numbers, well, the dollar's going to come rushing back. So there's two trades here, right? When we look at the whole opportunity, you've got to, obviously the trend is your friend. So strong numbers, we know what strong numbers do for us. It gives us the Fed another aggressive rate hike coming up, and that's a bit more dollar strength. But I tell you what, really, if we saw a turnaround in the numbers, I still think it's too early to see them. We would see a nice big dollar retreat, okay? And that is, when you're thinking medium term, long term, like the dollar is already running. Now, these interest rate hikes they've been doing, I'd say we're probably about 2 months away from them really impacting. So you'd think all the numbers are still going to be charging along and the dollar keeps going. The hardest part is you got to get onto your long-term charts and find the levels, because if there's no entry levels, right, you might still want to get into the trade, but with that, it's going to be a little bit disconcerting. Maybe a small trade size. The actual release of the data becomes the key entry level itself. So have a look at that, and don't think just because euro's at parity. As I said, I could see it going another 10 cents lower, especially if the ECB keeps sitting on their hands and going, we're not going to do anything. So big week. Inflation numbers, you've got now the other thing is you're going to see across the board business confidence numbers, economic sentiment numbers. Now these Westpac ones aren't anything particular, but any sort of sentiment or confidence numbers, okay, people like the market's going to watch those, right? Because that gives you a bit of insight into consumer spending, consumer thinking, where their head's at. So that's going to be important. GDP for UK, well, I don't think it's really on the radar yet because it's more about inflation at the moment. And so we've even got US retail sales. That'll be a nice little extra component on top of the inflation numbers from Wednesday. The Aussie employment numbers, well, Aussie employment and inflation have been highlighted by the RBA. And here's the puppy here I was looking for. The Bank of Canada interest rate decision as well. Right, so there's lots to look at. Now, you don't need to go chasing trouble. I mean, obviously, this is going to be the main event, and you'd expect a fair bit of, maybe a bit of liquidity coming out just before the release, a lot of volatility depending on what happens. Now, you're really looking for a really strong number to get the dollar moving. Where it is, it's sort of weird because it's right in the middle of nowhere. As in, like, you might see a little shock move up if it's strong numbers and just drift down a bit. I sort of, because we've got no technical levels around, it's a little bit harder to actually sort of verify what we're doing, as in where the best levels to get in, all that sort of stuff. The Bank of Canada, from central bank announcements, you got the interest rate decision, the statement, press conference, all these different things coming out. So have a look at that. The consensus is for a 0.75% hike, right? That's pretty aggressive. Isn't it great to see all the central banks scrambling for cover, right? They're all under the pump. They've seen what's happened is they've seen what's happened to the Fed as far as letting inflation get out of control. And they're all coming in very aggressive with 0.75s across the board. So, you know what? Someone was asking me what I think about interest rates. I'm like, 10% easy. I know it's almost too big to fail the rest of the economies, but I tell you what, all the central banks have got their hands full. The interesting part will be, I'd say like the RBA, the Bank of Canada will come out, they do their 0.75 and they'll go, you know what, if the economic numbers, and this is where they'll tell us what the kickers are, inflation and employment, mainly inflation, if they're strong, we're going to go again and again and again, right? They're trying to get everyone to stop spending. But the funny thing is, the central banks need to start pulling liquidity out of the market, not just raise interest rates, because all the money's still in there and people are just spending it, right? So it's a little bit problematic. So today, Aussie and Euro will be sort of in play. Then you come into tomorrow. By the time we hit tomorrow, every news service is going to be just talking about US inflation numbers, right? Once that's out of the way, okay, a couple of hours later, an hour and a half later, we'll have the Bank of Canada interest rate decision as well. And then we start to get into sort of some normal trading. We'll have another week of really strong sentiment from those inflation numbers if we do get some sort of variance. And so the trading after it will be good. I'd expect a sort of decent move. What we're looking for is something above 9%. The consensus is 8.8%, but a 9%er, you know, the Fed are going to go again, and it's going to get messy. All right. So anyway, that's where we are. And what else we got here to show you? Well, if anything, the markets are actually behaving quite well. I was going to say, like the US equity futures up, right? On the day, US equities were down. They've rebounded. It's only a slight move, but you're seeing that the move in the equity markets really connect across the board, right? So it's a pretty good thing. The other part is the volatility index is dribbling lower. You know, it means they're not too worried about these inflation numbers. It's just a number, right? It's just telling us, are the Fed going to go again or not? That's all you got to think about. As I said, the hard part is actually trying to work out where you're going to get into these trades, because the charts are a little bit kooky, right? But I tell you what, the equity indices, there's going to be some blood on the streets. If these numbers do come in at 9% or up around there, you got to expect the equity indices to get another beating. Okay, so you can actually start to really focus in on these. I am actually currently doing some analysis on the ranges and all that sort of stuff. It's just, I was hoping to get this thing done before the start of this week, but there's a bit more work to it than I thought, and I'll hopefully get that to you shortly. But just having a look here at some of these levels, it's really wise to start drawing some trend lines here, because the equity indices are going to be very directional. If anything, I mean, the only other thing, this is what I was trying to get through, and I'll hopefully be doing some of it today, is when you're looking at trying to trade, say, the equity indices, and if you're not used to the instruments, is trying to work out the general average range, right? Daily range. The spreads are very important, obviously. And what is like if you're used to trading the Forex market, like a lot of us have been, the spreads and the liquidity around the release, we sort of know where it is, and we can sort of factor that in a bit. The equity markets, they get very wide. So you got to try and stay in the game, or wait for that first initial shock and then go in afterwards. Okay. So the good thing with the US numbers, though, is you usually see the numbers come out first, economic numbers, and then the equity markets open up afterwards. So we should get a lead in with the US equity futures, and we could basically plan the opportunity depending on what happens. So don't forget, the easiest one as well, if you are looking at those equities, got some levels here, so on the S&P, and there'll be some here on the NASDAQ as well, down around here somewhere. If the numbers come out weak, then the market's got a bit of time to prepare itself to buy equities. Okay, so it's going to be like a scramble. And don't forget, you don't have to just trade the US equities. Okay, what happens on those will be replicated across all equity markets. So you can actually trade your local stuff if you feel a bit more comfortable with that. All right, guys, a bit cold here. So I'm sort of jumping around. But anyway, that's where we are. It's going to get very interesting. Like, this is the key number, right? This is the key number. It's the basically, when I look at the markets as they are right now, we've got everything working in the same direction. And we've got the fundamental release coming up, and this is the kicker. It's the one thing I've been talking about with just one adjustment in the daily trade routine. This is the best trading opportunity of the month, much better than the Fed, right? Because this will tell us what the Fed is going to do. All we're looking for is stronger or weaker numbers. Like an as expected number, that really sucks, right? Because it's not that clear. All right, guys. Well, that's it for me. I mean, these instruments are really honking along. I'm on the wrong damn screen. The dollar index, etc. I mean, if you can't see that this thing is trending up, you're a little bit blind, because it is rocking and rolling. And all I'll be doing is trying to get some numbers up here. As I said, don't forget, if you're missing a lot of this, and I haven't captured much of it at all, the one to anticipate is the next move after this is when the inflation numbers stall, right? You don't want to miss, if you miss the move going up, you don't want to miss it going back down. But anyway, we'll talk about that when it gets there. All right, guys, that's pretty much it. Global markets, pretty active. Lots of red on the, I love it when there's lots of red on the screens. You shouldn't get oh, terrible. No, this is exciting, right? Because fear, right, and big down moves, they're much easier to trade because you can see where the pain is, right? You can see like the crypto is obviously under all sorts of pressure, and they're going to come under more pressure if we get strong US CPI numbers today as well. So maybe if you're having a bash at those, something to think about. All right. Anyway, have a good one. Cheerio.